Good day, YouTube. This is J Money with Falling Forward Financial. Just a article here. One under the radar growth stock to buy and hold. And I don't have any of this one right now. I think I've talked about it once or twice on the channel in the past, but it doesn't look too bad, so I might have to look into this one a little bit further. But it is PAYX. It provides payroll benefits and human resource services for small companies. The stock price has returned 12% over the past 12 months. Earnings increased 23% in the most recent quarter, and revenue was up 15%. So a couple of good catalysts right there on this one. So they've averaged double-digit annual earnings growth over the past 5 years, and has flourished in this bear market. So most fintech stocks, I've talked about fintech stocks here on the channel a couple times. They've taken a beating in the market, but not all of them are fintech. One fintech that has flown under the radar is PAYX, ticker PAYX. It's a company that provides payroll, human resources, and benefits outsourcing services to small and medium-sized businesses. You might even get your paycheck through a PAYX system and probably don't even realize it or notice it or care. So you just care where the money hits your deposit and increases your bank account. So that's what it's all about. But has not only generated market-beating returns, but it also has a strong balance sheet, reduced valuation, good margins, and excellent growth prospects. And we'll go ahead and take a look. So it is a steady grower, leading providers of outsourced payroll, benefits, and human resources services, focusing on small companies. It has benefited from the changes accelerated by the pandemic in several different ways, including an increase in the number of employees working remotely and the need for companies to create operational efficiencies by outsourcing these functions. So also the rise of cloud computing and new technologies has impacted the growth. So PAYX is a steady grower with earnings rising at 9.6% per year over the past 10 years on an annualized basis through June 22nd. Annualized earnings growth has been stronger over the past 5 years, rising 10.8% per year, and that includes a sharp dip when the pandemic first hit. Here's a look at their chart. Again, PAYX right now at $122.43. So it looks like they recently hit about, we'll call that a 126, 127 range. And you can kind of see what they've done here over the last month. Kind of hit the dip here, probably around the 19th or 20th, and came back up a little bit since then. So it's got a $44 billion market cap. The day's range is 117.95 to 122.44. 52-week range of 105.55 to 141. So you got about almost $40 worth of appreciation in there. Volume of 1,830,000, and that's obviously off. Needs updated, but most recently in its fiscal quarter ended on February 28th, PAYX showed that its business is growing even in a down market. In fact, in many ways it flourishes in a down market as more companies look to outsource these functions, as Chairman and CEO explained in the earnings report. So while the impacts of the pandemic abating, businesses are still operating in a very complex and volatile environment. Focus is shifting from operational and financial survival during the height of the pandemic back to the employee-centric focus and attracting and retaining talent, remote work, and workplace safety being top areas of concern. PAYX generated a 15% increase in revenue year over year to $1.26 billion in the quarter, setting a record for new sales revenue. It had a 20% jump in operating income to $562 million and 23% year-over-year rise in earnings to $1.19 per share. Stock price is down 14% year-to-date as of June 23, and it is 12% over the past 12 months. So here's kind of some key advantages. The cloud-based platform also allows companies to handle payroll, HR, and benefits on one site, and has helped the company increase sales and retain most of its 710,000 clients. It recently won the Best Core HR Workforce Solution Award for a small and medium-sized businesses for the third year in a row from Lighthouse Research and Advisory. Their financials are strong, with $1.4 billion in cash and $1.2 billion in operating cash flow. Contrast, it has $885 million in debt and debt-to-equity ratio of 0.25. Further, it has a healthy 40% operating margin, is indicative of its operational efficiency. PAYX has a return on equity of 43%. Company expects to end its fiscal year with revenue 12% to 13% and earnings per share of up to 22.5% to 23% compared to a previous fiscal year. The price to earnings, or PE ratio, is 31, higher than the industry average of roughly 22, but is down from 35 a year ago and roughly on par with where it's pre-pandemic. So that is pretty much it for PAYX. Again, it's a solid stock and has had growth for years and has flown under the radar and continues to flourish through the tough market for growth stocks. Given the market environment and its key advantages, it should be able to gain market share in the years ahead. So we'll just have to wait and see what this one does. So as you can see by the chart here, it has had some growth, so not too bad on the return. So there's on Friday, it was up $5.12. I'm going to be watching this one a little bit closer. I might put in the buy order on this one and buy a couple shares, see what happens with it. If it goes up a little bit, might keep buying into it. Just have to wait and see on this one. So but if you have this one, go ahead and list that in the comments along with your cost basis, any other information you have on PAYX, and that we can share. Again, it was PAYX, PAYX. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing, and hit the bell so you're notified of when the next videos drop. Again, I don't give tax, legal, or trading advice, just stating my opinion. And I thank you for watching, and happy trading, happy investing, stay green. Cheers.